Hello, hello. I am Manav, third year student of Pilani campus, here to present my Sony final valuation report. Disclaimer: the values calculated here are my own and have no bearing if they are misrepresenting the values released by Sony Corporation. Sony Corporation records two-thirds of its sales in consumer electronics sector, and it's also into entertainment and financial service industries. It's listed on the New York Stock Exchange with the symbol of SME and issued as common stock. Its 52-week range shows a low of $9.57, which it has hit 3 months ago, falling from $28. Presently, it's on a rise with its current market price at $13.8. It also enjoys a large market capitalization of $16.54 billion. Here's a segment-wise split-up of Sony sales, with electronics being the major contributor at 66%, followed by games at 11% and motion pictures and financial services. As you can see, these segments of Sony are rather independent of each other, and this diversification forms one of the major strengths of Sony. Equity research of Sony can be done through fundamental analysis, ratio analysis, and equity valuation. Firstly, in fundamental analysis, we look into SWOT analysis and Porter's 5 forces model. Coming to the strengths of the Sony Corporation, as we have already discussed, Sony Corporation is very diversified in nature, with its major segments being quite unaffected by each other, and it's also has a geographically spread out and diverse client base, cutting down the risk all the more. Strong brand image as one of the leading consumer electronics producer, which fosters its customer acceptance, and also Sony Motion Pictures and financial services have a sizable market share of their own. Sony adopts an aggressive marketing strategy with great visibility among general public, and though its R&D costs stand high at $6 billion per year, it keeps up with competitors in releasing cutting-edge technology and hence creating a good market share for itself. On the flip side, it has a high cost manufacturing base, leading to lower margins due to high operational costs, and also the legal proceedings on hamper its corporate image. In consumer electronics industry, rivalry among competing firms is very high. Sony suffered major setback in mobile phone sales due to high competition from peers like Nokia, Apple, Samsung coming up with new versions of operating systems like Android, iOS 5, etc. It is currently regaining its position with a twofold rise in mobile phone sales recorded in quarter 3 of financial year 2012. Ratio analysis. Ratio analysis of Sony is a bit conflicted to give out any conclusions. As we can see, operating profit margin, net profit margin, return on equity, return on assets of Sony are all very less compared to the industry averages, which is a negative sign to the investor company relations. On the flip side, as we see, price to book value and price to sales ratio of Sony are less than 1 and fairly less than industry average, which indicates that Sony stock is a bit excessively undervalued, making Sony an attractive investment. Equity valuation of Sony. Equity valuation of Sony by TDM model doesn't give a good estimate of its intrinsic value, as Sony has incurred net losses in its net income and hence did not pay out dividends in its previous years. Hence, we calculate its intrinsic value by free cash flow to equity model as an FCFE model. Stock beta as calculated by me with respect to NYSE of Sony is 0.846, and the required rate of return on equity is 18.27%, and the constant growth rate of FCFE per share is minus 3.3%. Now, the intrinsic value of the share is calculated by three-stage FCFE growth model, and it turns out to be $14.24. And as the current market price of stock is $13.81 as per Jan 2013 data, this clearly shows that the stock is currently undervalued a bit. Conclusions. It's observed that the Sony stock is undervalued a bit, as in market price is lesser than its intrinsic value. Hence, it's an attractive investment and is expected to rise. Sony's stock has fallen from $28 to $9.5 in a year up to October 2012, and now it's on a rise according to the technical analysis of its stock price movement. It's either hold or a buy. Though previous data of Sony recorded a loss in net income, its current sales are rising, and it's recorded a net profit in quarter 3 of financial year 2012. And on top of this, its price to sales and price to book value ratios, which are less than 1, add to its attractiveness as an investment. Hence, I conclude by giving a hold call to the owners and a buy call to the investors. Thank you.